You can't?
Yeah.
Oh, you are in it?
I don't know the address.
Oh, it's in the Facebook group.
Yeah. I'm not in the Facebook group.
Oh, you're not. Okay, I think it's what is it? I think it's here.
There's a
Show
bit
ya.
of software you need.
It's telegram.me/BaliFilter.
Yeah.
I've got it on my phone.
You should be able to sign in. That's big. Hi. Are we on?
We're on. All right, guys. Welcome. It's 5:02. Rain or shine, we get going on time around here. No more Bali time. When it comes to the filter, we like to rock and roll at 2 minutes after the hour. That's late enough for me. Welcome, guys. It's Tuesday, February 28th. This is the filter number 116. We're going to talk about Bitcoin bubble territory tonight. Is Bitcoin in a bubble? Yes? No? All right. We're gonna see what Vinny Lingam thinks. He just published an article 2 hours ago, hot off the presses. We're going to see what he thinks as we're talking about our little pricing discussion that we do every week. We're also going to go through some other things that have all-time highs. You know, Bitcoin's it's flirting with the all-time highs, but there's some other things that are having all-time highs. Does anyone know what else is reaching all-time highs these days?
The US stock market.
Yeah.
Military spending.
Oh, yeah, military spending. Maybe we'll do that one next week. That was a good guess, Deborah. We're going to talk about the U.S. stock market. Maybe the U.S. stock market is also in a bubble. But we're going to take a look. That and your news stories coming up. Let me share my screen, guys. Get this thing rolling. All right, it's a bit of a one-man band, but I think I should be able to share the screen with our folks at home. There we go. I think they're seeing what we're seeing up on the screen, although they can't see the Telegram group, but we can see that in the room. So if you have a question and you're shy, dump it in there, and you guys help me keep an eye on it. All right, we are coming to you live from Ubud, 5 p.m. every Tuesday night. We do that here in Bali. And of course, after we get together in person and talk about nerdy stuff, we go to a local joint and talk about nerdy stuff some more. Tonight we're going to go to Bali, Bohemia. They have karaoke night tonight. And I sent them several Bitcoin songs that, hopefully I can sing Bitcoin karaoke songs for you tonight. You're not going to want to miss that. So I'm sure somebody will have a camera phone so that you can have blackmail material for me. But yeah, we're going to go over to Bali, Bohemia after the thing tonight. See what they know about karaoke. And I'm having trouble here. Oh yeah, no Taco Tuesdays at Bali, Bohemia. Sorry. All right, there's the Facebook group. When we're not together in person, we post stories in this Facebook group. If you're not a member, I hope you'll join. And this is where I get all my material, so I don't have to work too hard every Tuesday. I can just cherry pick some stories that I think are interesting, and then I can see what your opinions are when we get together at the show. All right, let's talk about price. The price right now, 1,178 US dollars. That's almost 16 million rupiah price. Yeah, that's a high price. Check that out. This is what has happened since October of last year. Wait, is this? I'm sorry. This is this is October of last year. Look at how steep that climb is. It's craziness. Is it bubble territory? I don't know. We're going to talk about it, but let's take a look at the last week. So this is the Bitcoin time machine. We can go back 1 week ago. We were down under $1,100, and now we are flirting with $1,200. Although we come down off of that, it kind of looks like it's bouncing off this $1,200 line here. And $1,200 was what it was way back when we had the Mt. Gox thingamajig happening. And all of this was recovering from that boom-bust cycle. So that's why it's interesting to consider if Bitcoin is in a bubble right now, because if it is, look at how long it takes to recover from a bubble of this magnitude. You can see how steeply the price climbed from like $200 up to $1,200 in less than a year. I think it happened in just a few months at the end of 2013. And so here we are back at those all-time highs. And if certain things happen, you know, this was the previous all-time high down here. And we went up to 1,200. If we take a similar exponential rise, that's going to put us, well, could that put us in $3,000, $4,000, $5,000 territory? Thumbs up, but if it's another bubble, does that mean we're going to have another 5-year recovery time or 4-year recovery time if the price climbs too quickly?
Why don't we look at the USD to XBT chart and see if USD is a bubble?
This is USD to XBT.
No, it's the other way around.
Oh, you want to? Well, if
Look
you
at
flip,
USD in Bitcoin and see if that's a bubble.
this is USD in Bitcoin. This is 1,200 USD
No,
for one
in
Bitcoin.
USD. That's Bitcoin in USD. I'm talking about looking at USD in Bitcoin.
It's just going to be the inverse of this.
Is it that simple?
You want to see here? I think we can switch these.
It's USD.
All right. Edmund's always asking me to do things on the fly.
Let's see if USD is a bubble.
Does that make sense?
At least that's the question we'll be asking at some point in the future.
Okay, so 1 USD is like, well, it's just going down and down. You can see these are the inverse downward movements. But yeah, it's just the inverse of the graph. All right. Speaking of Bitcoin price, we also look at Willie's 60-day volatility. Last week it was 6.8. Now it's 7.9. This thing is flying all over the place. And I know there's a lot of information on this graph, but the thing that makes it interesting is this trend line right here. This is the regression line through all of the ups and downs. You can see the remarkable trend downward, right? And once this line, this trend line, crosses over into fiat territory, that's what these two lines are, I think USD Euro cross, USD New Zealand dollar cross. Once the Bitcoin volatility is in the same range as US dollar, Euro, US dollar, New Zealand dollar, then it becomes a better store of value than those fiat currencies. So it's really interesting to keep an eye on this volatility chart, and we have a great resource in Willy Woo. If you search for Bitcoin volatility in Google, you get an article by our man Willy Woo. How cool is that? I think this is a pretty neat acknowledgement of Willie's work, and yeah, it's nice to see a disinterested algorithm thinks Willie is smart. The Google algorithm puts his article on top when you search for this topic, and there's really good information in that article on the topic. The main point of the article is that point that I just made about volatility. When Bitcoin volatility starts to rival fiat currency volatility, then it's a whole new ballgame. Things get really interesting. Now, tonight we're talking about whether or not Bitcoin is in a bubble, and if it isn't a bubble and the volatility goes wild, we might not have those volatility figures that we like for years to come. So I think that's what the warning is when it comes to volatility and price. We all want the price to go up. And of course, whenever the price goes up, we see headlines like this from mainstream media sources, The Independent. Bitcoin has smashed record highs. What does this mean for the mysterious currency? There's not a lot of new information in this article. It's basically reaching out to people who have never heard of Bitcoin. It kind of describes what Bitcoin is. And but I throw it up here just because it's interesting that the mainstream gets interested when the price goes crazy. Right, and it's going to draw in a bunch of new investors, and when it does, well, what is the psychology that goes along with it? Because it's not all good. I mean, all of us in this room might be able to make a little bit of money in the short term, but we're building a Bitcoin economy here in Bali. For that to work, it's got to work as currency, and currency is very non-volatile. So it's a catch-22 for us because we like to see the price go up, but it actually makes it less useful as a currency when the volatility goes up. So let's talk about this eminent price movement, right? It's in the atmosphere that Bitcoin price is going up, right? let me just read a little bit from Vinny Lingam. This thing was published just a couple hours ago. I went through it and tried to find the interesting points to make, and hopefully you guys can chime in because I'd like to get your opinions too. He says, and I quote, "When I first began thinking about this post, I initially wanted to focus on why I believed that the Bitcoin exchange-traded funds," and we've talked about this, the ETFs, currently under review by the SEC, would present a dangerous situation for Bitcoin, right? So we're all talking about the ETF maybe driving the price up to 3,000 or even 5,000, $300 million coming into the Bitcoin market, your grandmother being able to invest her savings in Bitcoin through an ETF. It all sounds really good, right? But if it causes that kind of a bubble, quote, "Bitcoin has spent the better part of 3 years recovering from a pretty damaging boom-bust cycle, largely fueled by media," like The Independent, Mt. Gox, which is the former largest Bitcoin exchange out of Japan, and other market crashes, along with a number of negative situations, including Craig Wright, Mike Hearn, block size debate, etc. Right? So we had that incredible run at the end of 2013. It went from $200 to $1,200 in just a few months, and everybody was very, very excited, right? But we spent the last 4 years or so getting back to $1,200 Bitcoin, and arguably it hasn't been the smoothest ride in the meantime. Let's see here. "Today I need to provide a warning about the risks of the price appreciating too quickly. Yes, Bitcoin is both scarce and valuable, which will lead to the price continuing to increase over time. But if that happens too quickly, we will enter another boom-bust cycle, which is really not an ideal situation if you want Bitcoin to move from a commodity, a speculative commodity, or a store of value." And of course, the next stop after store of value is utilization as a currency. And volatility is the enemy of Bitcoin's utility as a currency.
Or a currency being backed by it.
What's that?
Or a currency being backed by it.
Being backed by what? Backed by Bitcoin?
Yeah. Instead of gold.
So say a little more.
Well, because if it doesn't scale to be useful as a currency, it might still be useful as a store of value, which is what is backing.
Yeah, I agree. We don't have any guarantee that Bitcoin will become a currency. It could just be a reserve currency or a store of value or some sort of remittance layer or value transfer layer. If Bitcoin transactions cost $100 per transaction, like they could do if the scaling issues are not solved, then yeah, it probably will never be a currency if that's the case. All right, we're at the point in the current cycle where if and when Bitcoin breaks around $1,300, it's probably going to run pretty hard and fast up to new highs, right? People have been talking about $3,000, $5,000. That's not beyond the realm of possibility, given historical forays into new highs, right? The technical analysts would predict somewhere between $3,000 and $5,000, and then a correction down below the former highs, right? So somewhere north of 1,300, which is where he's getting this $1,300 figure. My expectation is that until March 11th, the coin ETF approval day, March 11th, mark your calendars, that Bitcoin will not break through the $1,300 barrier. It may run up ahead of that, but I don't expect it unless there's someone inside the SEC with insider information on the ETF approval status. So watch the price of Bitcoin. You can bet that somebody's going to know what's up and trade on that news in advance of March 11th.
So he's implying that if it does go over 1,300, then there's a very good chance ETFs go ahead.
Yeah, well, you never know. Someone could also get involved in the market and push it around to try and represent that situation. If you've ever played poker and you wanted to represent a hand that you didn't have, that also happens in markets. If somebody wants people to think that they know that the Bitcoin ETF will be approved and gets in advance, it could push the price up and then get out when the approval doesn't come through. What's interesting about this trade, though, is that Bitcoin is a scam. Hey, Will. We see you in the chat, my man. Thanks for ruining my whole life with your sarcasm and comments. I'm trying to get these people to like Bitcoin. All right. What else we got here? Many pundits are already claiming that the ETF has not been priced into the currency, but they're actually wrong because the probability of it happening is right around, they're saying 34 or 35%. There's actually prediction markets that are tend to be pretty accurate when it comes to these things that are predicting 34 or 35% possibility that the ETF will go through. People are betting real money on these outcomes. But if it does happen, this will be a very strong buying opportunity for sure, right? Because if it does go through, then it's gonna go higher, and we're in all-time high territory. So who knows how high it will go? However, if it is approved, it could trigger a massive bull run similar to previous runs, especially since it would probably mean that the second ETF decision, and I wasn't aware of this, there's another ETF that's due to be approved or disapproved on March 31st. And I guess if the first one makes it through, then the second one will probably make it through. And that's just fuel for the rocket ship, right?
So 11th of March is actually just individual request for an ETF from a specific company.
Yes, there
It's not like
are
a
several
general-
proposals in front
Okay.
of the SEC, and I guess these are the two dates
Okay.
when they will make
Okay.
a go, no-go decision. All right. So he goes on to make some interesting points here and categorizes the people that have Bitcoin. So see if you can put yourself into one of these categories. There's the mooners. Bitcoin is going to the moon. Shout it from the rooftops. Basically the pumpers, right? Then you've got the pump and dumpers, buy, sell, and that's the category of person that might try to play on the ETF news or try to make certain people think that the ETF is happening just so that they can sell it after the news hits. There's the hodlers or the hoarders. Does anybody know the etymology of the word hodl? You guys know? Should I take them on? Hodl. Hodl. Back when we had the original spike up to $1,200, when it started coming back down in the main forum of, I can't remember if it was on Bitcoin Talk or on Reddit, but somebody was so upset that people were selling their Bitcoin that he just wrote in all caps hodl instead of hold, hodl, exclamation point, exclamation point, exclamation point. Like he didn't even have time to spell the word hold right because he was so panicked. So people who hold Bitcoin for a long time are now known as hodlers. That's where hodl came from. All right. Speculators, day traders, that's Will, making $1 million, pumping it and dumping it, watching it go up and down. The day traders, the people who watch the technical movements of Bitcoin. And this last category is something that he's kind of defining in this paper for the sake of discussion is the smart money, or people who take a longer term view, however, will buy and sell if facts change. Right, so a lot of people just buy and hold, and there's a new category of person, maybe someone who's been coming to the filter for 2 or 3 years, and says to themselves, if it goes up to 3,000, I'm going to pick that top and sell half my Bitcoin because I know I'm going to be able to buy it again down around 1,800 or 1,300 or some other technical point that you choose. And if that's the case, then that smart money will make that money at that time, and then they're taking their money like out of the system basically, and it could take longer for the whole system to recover from the boom bust cycle. And he's postulating there's more smart money people in the game now that will do that based on the boom bust cycle, and it could take years to clear out. So something to be aware of if you're a Bitcoin investor, because this next year is going to be a wild ride, and wherever it settles after the bubble and pop, because we're still in a circumstance where that might happen, it could take years to recover the gains that we see in this next little period of time. So the real problem is smart money. Smart money has slowly but surely been seeping into the system. There is a lot of smart money that is coming to Bitcoin in the past year at sub $1,000 prices. This will trigger part of the boom bust cycle. Let's see what else. Here are the key reasons. My explanations are brief, but why I believe the approvals for the upcoming ETF is not a good thing for Bitcoin right now, not in the best interest. So this is a reason to be happy if things don't go our way on March 11th and March 31st. And I tend to agree with these. The first one is the block size debate is not settled. We still have a throughput problem for Bitcoin, right? We are maxed out, 1 megabyte blocks. This past week, I think at one point we had 60 megabytes of transactions trying to make it into the next 1 megabyte block, which we only create every 10 minutes or so. So that is problematic. There's a backlog of Bitcoin transactions right now, and we don't know how the community at large is going to fix that problem just yet. It's an open question. We talk about it every week when we get together, and you know, if your grandma buys the Bitcoin ETF, she's not going to understand the news that basically transpires that will make her an informed investor, right? So if there's a bunch of money in the Bitcoin ETF and the price becomes very volatile based on this technical problem, then you know, who knows how long it'll take for the world to figure out what Bitcoin is worth. Number two, investors buying into the ETF on a particular day are subject to market fluctuations and gyrations. Depending on who has access to the supply and demand data and where the coins are being sourced from, this could lead to potential price and market manipulation. This is one of the criticisms that we've already had about ETFs. You know, are they going to create a bunch of paper Bitcoin and push the price around for their own means? This we see happening in gold and silver ETFs. Why not a Bitcoin ETF? One thing that's interesting about the Winklevoss brothers, this is one of the companies that would like to create a Bitcoin ETF. They also have a market, and their ETF is going to use a price from their own market. So it's very interesting dynamic. And if I thought that the whole system was fair, that would be a criticism and a knock on the Winklevoss ETF, but I don't know if the regulators will see it that way. All right, number three, retail and unsophisticated investors have no place buying Bitcoin right now. It's just too complicated and still too volatile. Losing 15 or 20% in a day is the norm for us living in the crypto world, but not for people who have their retirement savings on the line. The fact that it's hard to buy Bitcoin right now is a good investments, by and large, except for scams like MMM, OneCoin, et cetera, et cetera. So basically, buyer beware when it comes to Bitcoin investing. And if people are in an ETF, it's in that case, I guess it's the dumb money. And if people get burned on Bitcoin, it's not going to be good for anybody. Number four, Bitcoin will be the most successful when it's held in small amounts by large numbers of people, not when they are highly centralized in one or two ETFs that have to force sell it whenever people get the jitters or have to make margin calls. You think you've seen volatility, you ain't seen nothing yet. So a Bitcoin ETF could be bad for volatility, which again is bad for our little experiment here in Bali. Number five, it's even more prone to market manipulation. I just made this point a little while ago. Market manipulation and losses could even be worse. These are not risks that Bitcoin needs right now. Number six, it would be better for them to open an account at Coinbase and spend some time learning about Bitcoin instead of buying the ETF, because we need more educated consumers, right? Not people that are going to be burned if the price moves up and down based on indicators that they don't really understand or appreciate. Number eight, the irony of the whole ETF saga is simply that Bitcoin was designed and built to be a decentralized store of value and currency, yet ETFs are relics of the old world. And here we have everyone rushing in to create centralized pools of Bitcoin. It's kind of anathema to what Bitcoin is. So here's the upshot. Overall, I'm not against the idea of an ETF. I think it will be a good thing, but I don't believe that 2017 is the year for it. Once Bitcoin gets into the 3 to 5K range, hopefully in the next year, and the volatility continues to drop, then I believe we can expose it to retail investors. But for now, I'm hoping we can avert another bubble. So this is all good news for us. I mean, we're all kind of spectators watching what happens with Bitcoin, but I think this is a really thoughtful temper on our exuberance around a Bitcoin ETF. Vinny Lingham has been really prescient on a lot of things. He's one of the very good thinkers in the Bitcoin world and the crypto world. I would encourage you to read the whole article. I just tried to pick out the good parts, but there's some really good, more subtle points that he makes in the article. Check it out. Any questions on that? On the ETF or the Bitcoin bubble or $3,000 Bitcoin, $5,000 Bitcoin? What about being a savvy investor? How many people in the room have some Bitcoin? Guys come on Tuesday night, so if something happens, we're gonna, well, hopefully we can figure it out together.
So
And,
to be clear, we're not in a bubble now.
No,
Because we're just testing recent highs.
Yes, arguably we've
Previous
spent the
highs.
last 2 years recovering from this bubble. Let me see if I can get it on the screen here. There's the original bubble. Well, not the original, but this is the Mt. Gox bubble, and this is the recovery from the bubble that took from the fall of 2013 to the spring of 2017.
And that's a good thing.
Yeah, well, it's
Rather than
yeah, it's
2 months of.
This is a nice, healthy consolidation of the price. You could say that it's a real price now. There's lots more investors in the game, lots more places to buy and sell Bitcoin, lots more utility for Bitcoin. Also, this price is supported by a larger number of all Bitcoins. So the market cap is much larger than it was before. Is spread out over a larger number of people. But the next price will be an unknown price. And I think the question is it going to test $10,000 Bitcoin? If there's a couple ETFs and maybe an economic crisis and a confluence of some things that drive a stampede of people into Bitcoin, is it going to drive it to something crazy like $10,000, which is not out of the realm of possibility given the size of the movements we've seen in the past. I mean, we've seen exponential bubbles in the past several times. So it could go there. But if it goes there too fast, then it's going to correct. And then you're going to have a bunch of new Bitcoiners that are bummed out and probably lose some money. So anyway, remains to be seen.
In a sense, I'm thinking that if we want it to become a store of value, maybe we should stop talking about it like a commodity. I mean, as long as we carry on treating it and talking about it like a commodity, we're keeping it as a commodity, aren't we?
I don't know. It is a social construct, the whole thing. But I think no one person or discussion can really move things. It's got to be a social consciousness regard for it. I think.
It's like the 100th monkey, though, isn't it? I mean, you've got to be one of those monkeys that makes it store of value.
Yeah, I mean, I think. Well, I mean, if everybody stopped talking about it, then it would just be a digital nerd thing, right? Be like Magic the Gathering.
Well, I mean, we don't have to talk about the price at all. I mean, the first thing I noticed when I came to Bitcoin in Bali was how much time you spend on the price of Bitcoin.
Ah, so you're saying we should maybe not talk about the price and just talk about the. Yeah, that's a good point.
Mt. Gox is Magic the Gathering.
Yeah, you know that. Yeah.
Yes,
they were trading game cards before they were trading Bitcoin. BTC is not in a bubble. Ah, his Twitter post. Let's see if I can get this to come up. This is Willie's rebuttal. BTC is not in a bubble. Here's Bitcoin market cap to USD volume. Oh, wait. Yeah, it's too bad you're not here, Will, to defend yourself, because I disagree on this PE ratio analogy, because it really isn't a company with price to earnings.
What is PE?
Price to earnings?
Okay.
The most common way of evaluating a stocks, basically. So the price versus the earnings. But this isn't really, I agree with you.
Right. Well, it's an interesting way. I mean, we don't really have something similar to compare it to. So I think it's a useful question. But I don't know if you can use that to say if we're in a bubble or not. Well, actually, we weren't saying that we're in a bubble. We're anticipating a bubble.
Anticipating it.
Right. So I guess we agree with you there, Will.
Anticipating or thinking of the possibility?
Well, I mean, the conditions seem right for a run. I mean, everybody's, it's mostly a lot of technical indicators, but there's also real world macroeconomic indicators like the possibility of this ETF. But yeah.
I'm impartial.
I popped in a bit late, but what
I'm
was
excited
Vinny's take on the ETF? I mean, you said 35%. I'd read that the Winklevoss lawyers were saying 25% a while back. But what was Vinny saying? Like, was he saying he thinks it's going to happen or not? Did he have a take on it?
No, he said he hopes it doesn't happen. He said that he agreed with the 35% probability, and he also made the point. I didn't really get into it, but he made the point that 35% probability was priced in. So if it doesn't happen, it'll probably go down before it goes back up. All right, moving right along. Here is let's do a little health check on Bitcoin. Here's the current price of a transaction. Like I said, each block in the blockchain is only 1 megabyte, and so the price of a transaction is priced in bytes. Right? So however big your transaction is, it's 121 satoshis per byte. Satoshi is the smallest denomination of Bitcoin. 1/100 millionth of a Bitcoin is a satoshi. And right now, the going rate is 121 satoshis per byte. And check this out. This is the number of people that paid more than 90 satoshis per byte and how long they've been waiting. This chunk of people right here have been waiting greater than 12 hours, even though they paid more than 90 satoshis per byte. So it's, in my opinion, Bitcoin is broken when this happens. It's suboptimal, not ideal. When, who knows, we've got new users every day, especially when the Bitcoin price goes up. This is one of the reasons we talk about price so much, is because price is what draws people to these meetings. For better or worse, a lot of people show up when the price goes up. And so when the price goes up, you can assume that there are lots and lots of new Bitcoin users, and they are experiencing 12 hours plus Bitcoin transactions when maybe they paid 50, 60, 70 cents for a transaction, US cents. So
it would be easy to understand this graph if every bar was the equal length, so that you could sort of compare each percentage of weights for each category.
Yeah, it takes a little getting used to it. I think it's useful the way it is. I'd be interested to look at it in a different format. But basically, this light blue line are all the people that have been waiting more than 12 hours.
Because there's a percentage, people who paid less than 40 satoshis per byte, it's roughly the same as those who paid more than 90.
Right. Well, and we don't know exactly what they paid or what the conditions were when they submitted that. Right? Because whenever your wallet decides to send Bitcoin, like if we go to Bali Bohemia tonight and we pay for our bintang with Bitcoin, it's a lot of B's, then our wallet figures out what the going rate is and submits our transaction with that going rate. So it'll say, oh, the going rate is 130 satoshis per byte, and your transaction is so many bytes, so I'm going to tack that on. But if somebody shows up in the next 10 minutes and submits all their transactions with 150 Satoshis per byte, then it's very unlikely that your transaction will make it into the next block, right?
If you look at the less than 3 hours, is it less than, what's the purple one, less than 3 hours?
Less than 3 hours, yes.
You're far likely to get it in less than 3 hours if you pay less than 20 Satoshis than if you pay more than 90 Satoshis.
So
I mean, like more, almost a half of the less than 20 Satoshis were confirmed in less than 3 hours. So why would you pay more than 90 when you've got less of a chance of getting confirmed?
I could imagine this is related to the daytime. Like the price is really high when there's afternoon in, I don't know, China, and like the price is really low when there's night and nobody wants to make a transaction.
Well, there is an ebb and flow to this, and actually there needs to be an ebb and flow for it to actually catch up, right? There has to be a time when the whole backlog catches up with itself, and you can see a bit of the ebb and flow over the last 24 hours in this graph. So there was 20 megabytes of transactions in the memory pool, and then we had lower transaction volume, so it could catch up a little bit, and then here you see it ramp back up to over 30, 35 megabytes of transactions waiting to be cleared here in the latter part of.
Is that GMT?
Good question. I don't know. Is it 8 a.m. in Greenwich right now?
Yes.
Okay.
No, it's not.
No?
I think a lot of the wallet algorithms are broken. I mean, I'm struggling to find a wallet that, I mean, I want to pay less than 20 Satoshis judging from that, you know, because I think I'm more likely to get it confirmed in less than 3 hours if I paid less. Yeah.
Well, there's a lot of scholarship, I think, taking place right now in calculating fees correctly, and now that it is so expensive, you write something that works really well, that someone will want it.
It's graphic. I mean, are the wallets using an? I mean, they just use the data from this. Oh, I don't know. I need to think about it, but
Okay.
It's broken.
All right. You can give us a new algorithm next week, right? So that we can save on transaction fees. Here's a little bit of the ebb and flow you can see over several days, where I think we probably do have a day-night cycle, like you mentioned. You can see it goes up and down, oscillates between 6 transactions per second and 2 transactions per second, right? And every single block is jam-packed, 999, 999, 999. These blocks are full. Bitcoin is jammed. All right, so because it's jammed, there's a lot of unhappy people in the world, in the Bitcoin world, debating this issue. And right now, there is a yearly conference called Anarchapulco in Acapulco, Mexico. Happens every year, and you've got a debate happening here between Tone Vase, who's a trader and commentator, who's pro-segregated witness. That's one of the scaling solutions on the table. And this is Roger Ver, aka Bitcoin Jesus, one of the earliest Bitcoin investors, who has funded, I think, a lot of the development for Bitcoin Unlimited. So, and that's just a larger block size and a block size that is determined by consensus rather than hard-coded. So anyway, by the way, if you guys aren't familiar, anyway, if you check out our the YouTube channel for The Filter, which is where we publish this meeting every week, there's a playlist called Watch With Us, where I posted these videos. There's also another good one with one of the developers from Blockstream. If you're interested in this scaling debate, I really suggest you watch some of those videos. I think, well, it's really interesting to see how people communicate and how frustrated people are and how people talk past one another. Because, when I watch, I can see the thinking that goes on in one side and the thinking that goes on in the other. And there's very little empathetic listening to try and figure out where the other side is coming from. And I think both make valid points, but they're stuck in their camp. And especially when you get to watch them on video, you can see some of the body language and and see how some of that transpires. Let's see how we do on time. Here's a little graph of what has happened to transaction fees over the last 6 months. Back in September of last year, there was only about a half a Bitcoin in transaction fees per block, and now we're over almost, what is this? Almost 2 Bitcoins in transaction fees per block, or per day. No, 200 per day. So we went from 50 Bitcoins in transaction fees to over 200 per day, and all that money goes to the miners. And so the irony here, the catch-22 is that miners don't see a problem. They're making more money. They don't have any incentive to fix the problem because, look, they're making 4 times as much on a daily basis because of this backlog. You know, I always said that I left banking and left the money technology because the banking system profits on not being efficient. And I said, oh, Bitcoin, they're going to solve that. Here we are now with human beings and their greed showing up again, making self-interested decisions that are really not good for everybody. But
Harry, judging from that graph that you showed earlier, given how many backlogs of plus 90 satoshis per byte transactions there are, they definitely would make more money if they could include those into the block.
Right. And I think Will was doing some fee analysis to find out just how much larger, you know, because if there's no backlog, then they make a lot less fees. But if they can get their backlog to some sort of sweet spot where maybe there's always a little bit of a backlog, and so you always pay a little bit more to get your transaction to the next block, but if you're cheap, then you know you're going to wait longer, but it'll eventually clear. Like we're definitely not at an equilibrium point, and there is probably a larger block that is a better value for all the miners, but someone has to figure that out with the math, and then also sell all the miners on this new idea, right? We have to get consensus on it. But you can imagine there's 50 megabytes with all the transactions associated with those, with that backlog. If I'm a miner, I create a 50 megabyte block and I get all that money that's waiting to be spent. But instead I only get 1 megabyte worth. So yeah. There they are. Here's the YouTube channel. This is the Watch With Us. And every time there's a video mentioned in the Facebook group, I throw it up here, and you can, if you're ever at a loss on what to watch next on YouTube, head on over to the Filters YouTube channel, and you can see what we're watching and talking about. All right, enough about Bitcoin. Let's talk about real money. Here is the Dow Jones Industrial Average. Now, this is a little bit of U.S. focus, but are you guys familiar with the Dow, the DOW Dow? The Dow Jones Industrial Average, right? This is also at an all-time high, 20,837, almost 21,000, right? Look at the last. Let's see. Let's look at the last year. Here's the election. On election day, we were at 17,888. And this is the Trump rally, all the way up to 21,000. Is that a bubble?
So where's the money coming from? I mean, what's going down for that to go up?
Well, presumably, well, I don't know. You know, there's we printed $4 trillion. People can borrow money at a 0% interest rate. I think that this is a function of those policies. Let's take a look at that for a second.
Also repatriation of funds overseas. It's also moving from bond market to equity market, etc.
Check this out, guys. This is a graph from the Federal Reserve, the United States Central Bank. The red line here is the federal funds rate, or the rate at which banks loan money to banks overnight. And essentially, this is the rate that almost all other interest rates are based upon, right? Your credit card rate. If the federal funds rate goes up, then your credit card rate goes up. Then your mortgage rate might go up if you're on an adjustable rate mortgage. If you're borrowing to buy a car, it'll be a different value. And this is one of the policy mechanisms that that the United States government and the Federal Reserve have at their disposal to get the economy moving, right? And by the way, if you can borrow money at 0% and you think you're going to make money on a Trump rally, then maybe you borrow on margin, and perhaps that's why that's where the money came from. You ask the question, where does the money come from? Well, if you can borrow it for 0% interest, presumably some people are borrowing the money. Also, represented in blue here is the amount of base currency in circulation. This crosshairs right here is the 2008 global financial crisis. You can see that we dumped the interest rate down to 0, and we proceeded to quadruple the base money supply. These are the two mechanisms at the disposal of the U.S. Federal Reserve. They can control interest rates, and they push those down to 0. That's, well, there are exceptions, but that's pretty much as far as you can go. And we've quadrupled the money supply. And I don't know if you can you see this gray line, this gray kind of area here? And there's more over to the left. But these are recessions. Our last recession ended, I think, in 2009. And since that time, we've quadrupled the money supply. We've held interest rates down to 0. The Dow Industrial Average has gone from, let's see, 12,000, and it dipped down to, wait, is this the, yeah, went down below 8,000 in 2008, and now we are at almost 21,000. Right? But it's artificial because we've quadrupled the money supply and we've kept interest rates down at 0, and we are due for another recession.
So can we factor in this inflation and look at a Dow Jones graph with that factored in to see if it actually would still go up?
Well, there are other people, I don't have a graph handy, but lots of people have shown that there is a direct correlation between the money printing and the S&P 500, the Wilshire 2000, and the Dow. So a very strong correlation between the new money that has been created and the value that has flowed into presumably what they must think is a hedge against all that new money, which is putting it into the stock market.
Also, curiously on that, those recessions seem to happen straight after they suddenly start nosediving the red line. So is it a result of that red line taking a dip, or is it just that they only identify it as a recession?
Well,
certain way into them.
I do see that there's a correlation. I don't know if that always happens in advance of a recession, but it could.
A recession technically like 3 successive quarters of negative growth.
Yes.
So of course it's going to have to be a little bit after this down, and the recession will be formally declared after it's been going down a bit.
I mean, they could be, they could be anticipating it and trying to lower in order to meet the recession that's coming and try and make it last a shorter duration. But anyway, we are due for another recession, and the question is, what policy decisions does the Fed have at their disposal if they're at 0% interest rate and they've quadrupled the money supply, right?
What's the problem?
What's the problem? Well, let's say that they need to stimulate. Let's say that we enter another recession today. What is their policy mechanism to deal with that recession? Because we've got an interventionist central bank policy, right? They want to even out the business cycle.
So doesn't the record high down indicate that it's a reversible recession?
Well, it depends on if it's real or not. Is that a function of the money printing, or is that a function of the real economic growth?
Are there not other indicators like relatively low unemployment, export volumes, and other indicators that suggest it's not?
Well, I'm glad you asked, because the Federal Reserve makes their decisions. They've recently raised rates, and they've talked about raising rates, off of this little floor down here, off of 0, and that's info dependent or data driven decision making. And here is the, let's see. here is the unemployment rate, and it's looking good, man. Look at this. The unemployment rate is down below 5%. Right? During the crisis, it went up to 10%. But oh man, you know, we've been working hard, USA, and we've gotten it down below 5% unemployment. Looking good, right?
What about the wages?
Well, this doesn't count underemployment. It doesn't account for, you know, I worked for Microsoft, but now I'm working at McDonald's. Like, that's a good point. What are the wages? But check this out. This is the labor participation rate. And here's the 2008 crisis. And you can see that we are down at 63%. So 63% of people who can work are working. Right? Unemployment is just people who file for unemployment. And if you've been unemployed for more than 13 weeks, then you just fall off the back. And this is the labor participation rate, which is as low as it was back in 1978. 1978 is the last time the labor participation rate was this low.
That was like getting women into the workforce.
Right. This is you know, women's lib to a certain extent. This is women entering the workforce. You know, people who used to have one person stays home, the other person is the breadwinner. Wasn't exactly the case. And so the question becomes, is it a real recovery if you've got this kind of decline in the labor participation rate? The other thing that has been happening that skews these figures is companies are buying back their stocks. This is an unintended consequence, but when you can borrow money at 0% interest, and if you take away the number of shares outstanding, then you can drive your own share price up. You're a CEO, you get your bonus, all your buddies get their bonuses, and voila, the stock market's up, everybody's happy, right? But I don't know, I'm trying to paint a picture for you guys that, you know, they always quote the unemployment rate, and they often quote the, you know, this is the CPI, the Consumer Price Index. You know, they're trying to create inflation, or also keep inflation under control. But it's all, well, I think that there's trouble in paradise. The other thing that I wanted to show you is this. We talked about this last week, but this is a graph of the money velocity. So yeah, the Dow's at 21,000, or almost at 21,000. But check out the velocity of money. We've quadrupled the money supply, and it's changing hands. It was up around 2, and now it's at 1.4. So by a factor of what? What is that? Basically 25%? 50%? Anyway, the velocity is part of the calculation for GDP. We talked about this last week, where you've got your money supply, but the GDP is a function of how often it changes hands, right? If I buy a loaf of bread, and then Deborah buys a car, and the guy who sold the car buys a house, and the economy is working, then that's GDP, that's spending, that's velocity. And there's an unmistakable trend, you know, to the downside. People are spending less money. Money is changing hands less frequently. People are scared. People are not spending. People are waiting, right? And we've got, you know, if you're just looking at the Dow, you're not seeing these things. Anyway, this is the upshot. There's a lot of talk about raising the minimum wage because a lot of people are having trouble. You know, there are people that are underemployed, and they look at the minimum wage and they say, how can somebody live on $7 an hour? But the scary thing is that, you know, there are unintended consequences when you raise the minimum wage. And this is just kind of, we've been talking about this a lot lately, but this is actually happening. The article says, last year we were talking about it, now it's happening. Wendy's is putting in 1,000 stores, these kiosks. That yeah,
Anyway.
yeah, probably so. But certainly it changes the equation when you can replace. It changes the payback period. If all of a sudden you've got to pay a $15 minimum wage, if you're looking at doing the machines this year versus next year, if you go from $7 an hour to $15 an hour, plus all the other things that an employee costs, sick time and et cetera, it just makes it just hastens the changes. So. All right. One thing that's interesting to look at, and I think this was posted in the group, it's interesting to look at Japan, because Japan is like in a time machine, and they're like 20 years in the future from us when it comes to monetary policy. They had their boom in the 1980s, and they had a crash in 1989, I think. And they first they called it the lost decade, because they had a decade of no growth. And they've got a central bank that is printing money, manipulating the interest rates. And they've been doing this for now over 20 years. They've had 20 years of no growth and spending and selling bonds. And the Japanese people, their debt to GDP ratio is over 200%. So imagine if you have a credit card and you make $100,000 a year, right? But you owe $200,000 on your credit card. That's the essence of what they've done. Plus they've got a demographic problem, and this is also a fast forward kind of thing that we will also see in other Western countries. They've got twice as many people over 60 as between 20 and 30, right? It's like an inverse pyramid demographically. So there's fewer and fewer people paying into the system, and more people taking out of the system through Social Security, et cetera.
The big headline from that was the example they always give is that 2 years ago they sold more adult diapers in Japan
than child diapers.
Yeah. First. It's very interesting.
Yes, that's a good one. Let's see, what do I got here? In November, Mr. Kuroda postponed his goal of reaching 2% inflation, all but admitting he's out of ideas. Look at this from 1990, the inflation rate. They've had basically deflation, no growth. He's at a loss. And it has a social impact, right? In the era of central bank improvisation, no other nation has pushed the envelope as much. The Bank of Japan was the first to lower its benchmark rate to near zero in 1999, long before Europe and the UK and the US did so in response to 2008. In 2001, Japan began flooding its financial system with cash to try and spur inflation and growth, a practice called quantitative easing, and it has not worked. And there are social implications to this. They've even been flirting with negative interest rates. This is quite a long article, but I want to get to like the social implications here. In a deflationary society, experiences don't lose value while anything that you buy does. So people aren't spending money on things; they're spending money, I think, on travel. Right? They're living with their parents. They're downsizing. The older people are saying the problem is that young people are too comfortable. They've got a term for these people with lack of ambition that are called NEETs, or not in education, employment, or training, while freeders work unstable part-time jobs or contract jobs, or Japanese parasite singles never leave their parents' home, and women complain about herbivore men who are not interested in having sex. What a did you ever know that what monetary policy could do to you? It's powerful. Now, I think that there's a bit of alarmist language in here, and this is the Wall Street Journal. They are on the side of the government. They tell the government narrative, and governments hate deflation because you can't tax deflation. You know, if a car is 25% less next year, then you get 25% less tax. And the benefit, that 25% savings, that the person gets, that accrues to the person, and they don't have to pay tax on that improved benefit. So deflation is bad for governments. It's usually a part of the narrative, like deflation is awful. But if you've enjoyed the falling prices of laptops over the last 20 years, then you can appreciate what a deflationary economy looks and feels like. And the prevailing wisdom is that the economy will grind to a halt if things are less expensive next year. But I don't know about you, but whenever I need a new laptop, I buy a new laptop, right? And I think we're entering a world where people's needs are more in tune with what they actually buy and spend. And that's really what I feel the economy needs to get to, a place where we're not overproducing and we're not under consuming. There could be an equilibrium there, and I think we don't reach that equilibrium because of all this government bank interventionism and stimulation and quantitative easing and artificial interest rates and bailouts. So that's my rant for the night. Any questions on our little central bank segment? Anybody curious? Anyone have any ideas what their personal tactic is for dealing with these things? Are we all screwed? How many people have savings and they're worried about losing the money that they've saved? Yeah. Wouldn't it be nice if you could just save it, have stable prices, and do your budget and live in a non-chaotic world? Yeah. I'm not sure if we're going to see that in our lifetime, but I do feel like sound money that works in a certain way, in a transparent way, maybe we can move the ball in that direction, kind of get there. That's one of the reasons why Bitcoin is so exciting for me.
So does vegetarianism lower libido? Is that what it's saying?
I don't know.
That's just the term I use. Just the herbivore man you're referring to.
They're too comfortable. Former economy ministers saying they're too comfortable.
They're too comfortable. Yeah.
Really.
Never mind that the Japanese have a word for death by working.
Yeah.
I think that probably comes from another generation of Japanese.
They're more slow moving, like the Brontosaurus.
Are you worried about your dietary choices, Edmund?
No,
Okay.
now that's been explained.
Okay, good.
I did hear something the other day about US workers now working longer hours than they do in Japan.
I would believe that.
Yeah.
Oh, my experience was in 2008. They fired like 20% of the workers, and then the people that were left behind were so upset and worried about their jobs that they just picked up the slack, and they just never rehired those people back. That's my,
The workloads never got.
Right. The workloads don't change. It's just do more with less. And
also, there's the holidays per year are so much lower than the U.S. and anywhere else in the world, right? The U.S. has on average 2 weeks a year for holidays or something.
That's true. That's a good point.
Like, right, versus Japan is still whatever 4 weeks. Europe is 6 weeks on holiday basis.
Mm-hmm. Yep, that's a good point. All right, guys, let's talk about Bitcoin a little bit. We talked about the ETF earlier, and so these guys, these two guys are in their mugs are on a lot of pages these days, and I wanted to show you the point that there's the odds of SEC approval. We talked about that, right? 34%. What they may be missing is the possibility that the Winklevoss twins will fail. A contract created by Bitcoin Mercantile Exchange, a cryptocurrency derivatives trading platform, to bet on the possibility of approval of the Winklevoss ETF is showing 34% odds. Where is the here's the point that I wanted to make, and I made this once before, but part of their proposal to the SEC is their fund, and along the way they've added settlement systems in order to establish the Bitcoin price and determine the net asset value of the ETF at the end of every day. Conveniently, that process will happen at the Gemini exchange owned by the Winklevoss twins. So, I don't know. That's a little fishy to me. What else have we got here? Nice. Have you guys been looking at other cryptocurrencies? You know, there's other things besides Bitcoin. You didn't know that, Teresa? One of the big movers lately is Dash. I think this is one of Willie's favorite coins. Will's a big Dash proponent, isn't that right, Will? It's a test to see if he's still there. Actually, I think Will would tell you that Dash is a scam, and that there's an article here. I'll post it up there. But this is a guy who published a story on Steemit about his interaction with the Dash community. Dash is thanks, Will. Dash is a fork of Bitcoin, and they made a few changes though. They took part of the block reward and they give that to what they call master node operators. So it's a bit of a centralization, right? If you've got, I think, something like $20,000 or $30,000, everybody knows that already. Well, if you've got enough Dash, you can become a Dash master node, and you're given some of the block reward in order to participate in the governance system. Also, part of the block reward goes to public relations, or some would say pumping, of the Dash coin. So that's just a mouse. Welcome to Bali.
Or a monkey.
or a monkey.
That's the second floor.
Yeah, so it's more likely a rat than a mouse. If we were on the second floor and we heard that, then it would be a monkey. That's just my hypothesis.
I mean, I got banned from the Dash group when I started asking questions like, how many developers are there that are getting this $4 million, was it $2 or $4 million a year wage? You know, because I don't know there's that many developers.
Yeah.
Like, even if there was 5, that's still a lot of money per person.
Indeed, indeed. Well, and you've got people that are running channels on YouTube that are kind of, I think some would say pumping it or promoting it, and also getting paid. And it makes you wonder, you know, how can they objectively represent what's good or bad if their salary depends on it going up? I don't know. I mean, it's I think a lot of people that are involved with it probably don't think they're scamming anybody. I mean, they would like to see it succeed, and you know, some people would say that it's very clever that they've set some of the block reward aside to pay developers and to pay public relations. But this guy is reporting the same thing that you're reporting, Edmund, that there's a lot of censorship and trying to control the narrative. And but Dash has been mooning lately. Check this out. This is the this blue line is the value in Bitcoin, right? So you can see it's like really gone up vis-a-vis Bitcoin, and the market cap is at all-time highs. That's like the theme for tonight's show is all-time highs. Dash is at something like, what is it? It's at like $28 now per Dash. $28.26 per Dash. So, and you know, there's $200 million wrapped up in this coin. Now you can see that it's it's very small compared to Bitcoin, right? But there's still a couple $100 million in there, and people stand to make a lot of money when it makes this kind of a jump. And we've seen, let's see, I can't tell, maybe a 10% jump in the last little while. So, and you know, I don't know, there's just a lot of, even if people aren't trying to scam, there's a lot of people that are trying to promote their own ideas, and it's kind of shark-infested waters. You know, you could probably, you know, someone who's not very savvy could probably go and find a really slick representation of a cryptocurrency, you know, send them their money, and then, you know, a lot of people have lost a lot of money in this game. So it's just a good idea to keep your wits about you, because you know, I think it's important to watch out for new things coming along, and who knows, you know, Bitcoin may not be the one that ultimately succeeds, and if it doesn't, it will be something else. So we need to keep our eye on this universe of other crypto coins. But yeah, buyer beware. If you got scammed and you go to your local police department, they probably won't be able to help you with with your crypto scam. All right, last story of the night. We talked about this a lot on the show. R3. 2016 was like the year of the blockchain. Not Bitcoin. Bitcoin bad. Blockchain good. Bitcoin bad. Blockchain good. And a lot of people left the Bitcoin community. A lot of the big names went and worked for the banks. The banksters, as some people call them. A big consortium, many of the largest banks in the world, they all put in a bunch of money to fund this development. And this company R3 was born. And well, I think it was like last November or December, the wheels started to come off, and some of the banks started to withdraw their funding, and then they released this thing called Corda, which wasn't actually a blockchain, right? Which I don't know, it's kind of interesting, you know. And what's interesting now, the update here is R3 is suing the Merkle because they reported this story. Where's the story? R3 appears to admit defeat, stops blockchain development. And where's the quote? Quote in there. Here we go. In a presentation about R3 Corda, R3 engineers, developers, and researchers stated, no blockchain because we don't need one, admitting that the utilization and implementation of blockchain doesn't fit their vision and, more importantly, technological capability. So, I don't know. It's just interesting that they take an old approach to, you know, a banking approach to the technology, and then they take a banking approach to the jurisprudence, right? But they're going to sue them or send them, sue them for libel. I don't know. I feel like this, in every sense, this is like the dying world. You know, it's like the fits of the old system trying to exercise its power and make its way in the face of just game-changing, disruptive technology that largely just doesn't care. All right, guys. Any questions on that? That was our last story of the night. Did I miss any big news this week?
What about the Cloudflare or whatever?
Oh, yeah, there was something wrong with the SHA-1 encryption algorithm, right? And Cloud Bleed, they called it.
Yeah, so they created a problem with Bitcoin.
Well,
Bitcoin taken.
Bitcoin doesn't use SHA-1, but GitHub, which is where they do their development, does. But it would, so there's a potential risk there, but it wouldn't be that easy to exploit. And GitHub, obviously, and Git, I guess, are just going to have to make sure that's phased out. But Bitcoin itself doesn't use it.
No, I'm talking about people having their password exposed. So.
Oh, but it was strictly with the Cloudflare, right? The Cloudflare service.
Doesn't matter. Let's say somebody uses the same password on all, which a lot of people do. They grab their password. Now the password is exposed, the one that they use for everything.
Right.
You know.
So people with bad password hygiene are affected. Yeah. I don't know all the details of that one. But is it just hurting people that use the same password on every site?
No,
or?
No, it's hurting everybody who's has an account with any of the companies that is affected, which is a lot of them.
Ah, okay. And it's a exploit that will allow anybody that maintains password, like user passwords, could be exposed. So does that mean we got to go in and change all our passwords?
You probably don't. But most people do.
Yeah.
I have to do it.
The leak is private messages from major dating sites, full messages from a well-known chat service, online password, manager data, frames from adult video sites, hotel bookings. Yeah, that's it.
Oh, I'm safe.
Yeah.
I mean, most websites moved away from SHA-1. I mean, 2 years ago. There was
Yeah, it was on the endangered algorithm list, wasn't it?
Yeah, but now it's quite a small percentage. But yes.
Yeah. I got to look into that. I don't know the details on that.
From Cloudbleed.
Cloudbleed, yeah, I don't know the details.
It's not related to SHA.
Oh, it's not?
No.
Because there's the story on that as well this week.
I really
But were you referring to SHA-1 or the Cloud Bleed?
to the cloud bit.
Yeah.
Oh.
No, I think they're both they both were big stories. So,
What was the other story?
the SHA-1 vulnerability. All right, guys. Well, we're out of time, out of stories. We're gonna put a bow on one more episode of The Filter. Thanks for coming tonight. Like I said, we've got our Facebook group, so join the Facebook group Bitcoins in Bali and tell us what stories we should cover next week. We've also got our YouTube channel. We actually have our own URL. The Filter Live is the name of the YouTube channel. We do this show every week at 5 p.m. from Ubud. If you're in Bali, please come check out Ubud. They are very nice people, and it's a very nice place to work. And if you're here on a Tuesday, they have a really cool show at 5 p.m. You can follow us on Twitter. We usually hashtag Bitcoins in Bali. My Twitter handle is @DyksterNet. We've also got Willy Woo contributing. You can find him at DangerMouse117. And that's it, guys. Thanks for coming tonight. We'll see you same time, same channel next week.